In today's video, I want to touch on Nvidia, the recent announcements, and a prediction. I predict that by the end of 2026, Nvidia stock will be above $200, so close to a doubling from here. Now, not going to waste your time, so let's straight jump into this reverse DCF just to see where we're at the moment. So Nvidia, if you plug in the free cash flow trailing 12 months, that's $60.85 billion. Terminal growth rate, I basically take the 10-year yield. Discount rate is basically an implied risk premium of 4.12% plus the terminal growth rate, you get 8.32%. Of course, you can play around with those numbers, and a 2% dilution rate. So to justify today's price, well, at the time of making this video, free cash flow will need to grow 14.5% each and every year for the next 10 years. Okay? Does that sound reasonable for a company like Nvidia? I think so. And I'll show you in a bit what the current projections are and what the, current growth rates are as well. And you'll see that 14.5% is really not out of the realm of possibility. Now, let's say we put it at 20%, right? Because this stock deserves a high premium. It's the best of the best, still expected to grow quite a lot. Let's put it at 20. I know 20 is quite high. But if we put it at 20%, the intrinsic value for the stock, based on all of these assumptions here, again, these are assumptions, this means that the price of the stock should be closer to $180.9, which represents close to 54% upside from the price we're at today, which, in my opinion, is not that bad, right? We're talking here about a company that's worth $2.87 trillion. So, is this possible? I think so, and I'll explain in this video. Now, if you enjoy this type of videos, hit all the buttons, especially the subscribe one. We really appreciate it. We're trying to reach 90,000 subscribers. So if you're new here, I appreciate you hitting that button. It's free. You can always unsubscribe later down the line. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So Nvidia at the moment is down year to date close to 16%, has a market cap of $2.87 trillion. But this company is still expected to grow quite quickly. If you look at revenue forward growth for 2 years, sits at 39%. If you look at EPS, same thing here, forward 2 years, 38.9%. So still, even at this size, it's expected to grow extremely quickly. Currently, the average analyst price target sits around 45% higher than the price we're at today. Now, you might say, okay, Nvidia, it's super expensive still. No, I don't think so. I don't think so because, first of all, if we look at the forward PE right now, forward PE, not forward and extra, so 2 years from now. No, forward PE, currently just under 26 times. If you look at the 5-year average, that was at 39.62. Of course, that's because there was one moment here where, it wasn't that profitable anymore. So you have to take that impact into consideration, but we're still far away from where we're at right now. If we look at forward PE and you add an extra year, so forward 2 years, we're around 20 and maybe a little bit below it at the moment. So for a company like Nvidia of that quality, looking at that forward PE, in my opinion, is quite crazy. And remember, in the last 5 years, Nvidia stock has gone from what? $300 billion company to close to $3 trillion company. And yet the PE right now is lower than where it was. The forward PE right now is lower than when it was 5 years ago. Quite something. And just for the sake of discussion here, Apple, a company that's expected to grow much slower than Nvidia, that has seen basically close to no growth in the last couple of years. Apple has a forward PE of 28.6 times. So not only is Apple's forward PE higher than Nvidia's forward PE at the moment, Apple's forward PE is also higher than its own 5-year average of 26.5%. So there is a small disconnect here. It just doesn't make much sense. Apple is a tremendous company, very, very profitable, free cash flow machine. Yeah, all of that is true. But if you're willing to put a premium on Apple, why aren't you willing to put a higher premium on a company like Nvidia? Just doesn't make that much sense to me. But okay. Moving back to Nvidia, if we look at forward price to free cash flow, price to sales, EV to EBITDA, here as well, we are below the 5-year mean. Yes, and here as well, as you can see, same thing as before with the forward PE, you get that huge impact or negative impact from that period at around 2022. Now, over the last couple of years, Nvidia has increased the amount of employees at the company. But what has also happened is if you look at revenue per employee, that has more than 4x since 2019. So yeah, they increased the employee count, but revenue per employee soared 4x since 2019. Pretty good. Now, this morning, a report came out that said Nvidia to spend hundreds of billions on US chip making over the next 4 years. The company expects to source up to $500 billion in electronics with several $100 billion in US manufacturing. Nvidia's latest Blackwell AI chips are already being produced in the United States via TSMC's Arizona fabs. He also basically said that the United States has to invest way more in AI infrastructure. There was that interview with Jim Cramer. Yes, so if the stock is down today, you know why. It's a joke, calm down. But he basically said, well, the conversation was about, well, you have a gold reserve, you have a Bitcoin reserve or a crypto reserve right now. Why not have an AI reserve? Whatever that really means. So he basically said, look, yes, if you want to be hyper competitive, don't just focus on what the others are doing, but make sure that you're making the necessary investments in the United States. Make sure that American companies, American products are the leading products and is used worldwide. So yeah, I think in the next couple of years, for companies like Nvidia, the Apples, the Metas, etc., Tesla as well, they're all going to invest billions and billions, hundreds of billions of dollars in AI infrastructure in the United States. It's going to be very important because as we talk about AI factories, which is something Jensen talked a lot about during CS, also talked a lot about during the GTC keynote. So first up, he talked about, well, not first up, he did talk about a lot of things, but here we're talking about Dynamo. Dynamo is a distributed inference serving library, which is essentially the operating system of an AI factory. Dynamo can aid Blackwell and Hopper with a giant leap in inferencing performance, right? We've had the training era, we had the training cycle, which is still ongoing, but the inferencing one is one that will require an order of magnitude more of compute. Now, they also provided their roadmap. I've talked a little bit about that during yesterday's video, so you can watch that. We've talked about the data center capex, and he noted that, okay, this is great, right? Over $1 trillion based on Deloro's projection worldwide for data center capex. But this only talks about data center capex. This does not talk about physical AI, robotics, AI factories, and all of that, because they said they're just inventing it right now in real time. The projections do not include certain aspects, and these certain aspects could be worth hundreds of billions of dollars. And he said something very interesting. So the challenge of building these data centers, and the reason for that is because the cost of operation, the cost of building it up, the TCO, total cost of ownership, the risk of building it up is around $100 billion, which is only 2 gigawatts, which means 1 gigawatt, around $40 to $50 billion. And so you can basically do the quick math here. Every gigawatt of data center is about $50 billion, roughly, let's say. So every gigawatt, $50 billion. And so when somebody's talking about 5 gigawatt, the math is pretty clear. So if you take 40 or 50, do that times 5, 200 to $250 billion. Now, of course, right now with Nvidia being, well, the market leader, has basically close to 90% of market share. You know that when somebody says 5 gigawatt, $250 billion, Nvidia will take around 90, let's stay conservative, let's say 80% of that. And yeah, that number is quite big, especially if you look at where we're at currently. Last quarter, they generated $35.5 billion in data center revenue, which is $5 billion more than the quarter before, $4 billion than the quarter before that, another 4, another 4, another 4. So yeah, when you look at these numbers are growing at a rapid pace. But still, if you look at the big picture, we're far away from where this number could be 5-10 years from now. He also said the following: we are an infrastructure building company now. So many of the things that you saw me or react to, I know it looks quite strange for a technology company to sit here and tell you about all these things that while you're sitting here buying this one, I'm already telling you about the next one, basically talking about Hopper, then Blackwell, then Rubin, and then Feynman, etc., etc. He's the greatest salesman, but at the same time, he's like he said a joke about being the revenue destroyer or something like that. However, I also know this because they need to run their business every single day. They can't wait to run their business in 3 years and do a better job. They're gonna run it every single day. They have no choice because we are in the AI factory business. So one, we are the AI infrastructure business, no excuses, no surprises, long roadmap. Two, we are in the AI factory business. We got to make money every single day. They're gonna buy some every day, no matter what. He said, the more you buy, well, previously he said, the more you buy, the more you save. Right now, the more you buy, the more you'll make. And with these AI factories, it's not like AI data centers. So right now you've got the AI data centers, right? Training, some inferencing. With these AI factories, he basically gave the examples of, well, every single company, doesn't matter if you're a Walmart, an Amazon, a Tesla, they will have or already have AI factories. So let's say you have a humanoid robot. Humanoid robot that does not have a super giant chip in that robot. No, it has a big chip in that robot, but that chip communicates with the AI factory that sits, I don't know, thousands of miles away. And that AI factory generates all of the tokens necessary for the humanoid robot to do useful tasks. And that's why I said that every single company will have a factory, and next to that factory will also have an AI factory. So we're talking now about data centers, but in the future, we're going to be talking about AI factories, and the number for that just gets bigger and bigger. So you take that $1 trillion in data center capex worldwide, you can probably maybe even double that, triple that if we're starting to talk, maybe even more, if we're starting to talk about AI factories worldwide. And so that's why when I'm looking at these numbers right now, right, this is great. Data center revenue has grown at a compound annual growth rate of 127% since the July 2023 quarter. Incredible. But why do we think that this is going to slow down so drastically in the next couple of years, right? The expected growth rate for revenue for fiscal 26 is 56.7%. Then it slows down to 23.3% and then 16.6% in fiscal 2028. Why is there such a drastic deceleration? Right? If we even look at free cash flow is still expected to grow a bit faster than that. So we're going from 61% year-over-year growth in fiscal 26 to then 29.7% year-over-year growth in fiscal 27, and then another 13.9% in fiscal 2028, which if we take the average of that, it's around 34% or so. So what we've seen at the start, 14.5% free cash flow growth each and every year for the next 10 years. Here, the average, of course, for the next just 3 fiscal years is basically more than double that. So that's why I've taken the 20%. Seems high, but if you look at the current expectations, it's not that high. And I think the market has it wrong. I think these numbers will be revised and it's going to be on the way up. Because think of it that way. Essentially, if you believe in this AI story, if you believe that AI will continue to grow, not just data center, but AI factories, if you believe that every big company or every company that is going digital, that is going to use AI, is going to have a sort of AI factory, if you believe in autonomous vehicles, physical AI, robotics, and all of that, if you believe in all of that, then why wouldn't Nvidia continue to grow above 20% for the next 10 years or so? Because if everything in the future is going to, well, in a way, use AI inferencing, they're going to be needing a lot more compute, there's going to be a lot more inferencing, a lot more token generation, as they basically showed us during the presentation. So why wouldn't Nvidia continue to grow like this? One hand, you don't believe it, and that's fine. On the other hand, you believe it, and the market in the short run is a voting machine, in the long run, a weighing machine. So yeah, I think the market will, whenever that will happen, flip the switch and the stock will reflect reality. Now, at the moment, it does seem like it does have some struggle going above the 200-day moving average, right? It's been 3 weeks. It tried, didn't really succeed. The 200-day moving average sits at $120.9. RSI is neutral at the moment. So yeah, I think the next 18 months, Nvidia is going to be at 200, maybe even above that. That's my prediction. I only hold one share. I bought it during the GTC event. It's a joke or joke/challenge that I did with Jose. Every single Nvidia event, I'll just buy one extra share. Why am I not opening up a position in Nvidia? Well, quick answer here. In my portfolio, to open up a new position in a company like Nvidia, I will need a lot more cash. I just don't have that cash right now. I have other positions. I have AMD, Micron, and an Intel. Yes, you could say sell those and buy Nvidia. Yeah, could happen, but I like those names as well. So we'll see what happens, but that's basically it. I used to own Nvidia, sold too early because I was young and stupid. Now I'm still young, maybe less stupid. I hope so. Anyways, that's all I've got for you right now. If you enjoyed this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.